telecommunications sector, and the board of Bharti Airtel has approved the initial public offering of its subsidiary, Bharti Hexacom. Bharti Airtel is one of the three telecom majors of India, which owns 70% stake in Bharti Hexacom, whereas the balance 30 is owned by the government. We have Smriti, who's joining us to give us more updates. Smriti, good afternoon.
Good afternoon, Agam. You rightly mentioned about that the 70% is owned by Bharti Airtel and 30% by the government, essentially. Now, government holds this stake through Telecommunication Consultants India Limited, which is a PSC. And now government is going to sell 20% of that 30% stake. So it's an offer for sale. There's no fresh issue of shares, and the proceeds will go to the government. There are 1 crore shares that'll be up for sale in this one. And just to know a little bit about what Bharti Hexacom does, it provides telecommunication services in Rajasthan and the northeastern states of India. If we look at the financials of the company, the revenue of FY23 was around 6,500 crore versus 5,400 crore in the previous year. Profit was 549 versus 1,674 crores. Now, this is a difference because of an exceptional loss. There was a trade settlement with a group company. So basically a Bharti group company only, there was a settlement. So which is why there's a difference in such a big difference in profit in these 2 years. The margins, quite healthy margins there, 44% in FY23, an increase from 35% in the previous year. That's where we currently stand. We're looking out for more details on this, and we'll keep you posted on all the updates.
Right, Smriti, thanks so much for getting us that one. It's certainly going to be a very interesting IPO to keep an eye on, especially from the telecommunications space. But we move on, and we talk about Axis Bank, which will report its earnings today with an expectation of improvement in net profit as well as net interest income. We have Mimamsa Verma, who's joining us to tell us what we can expect from that particular bank. Mimamsa.
Axis Bank is set to announce its Q3 earnings results on Tuesday, where it is expected to report a nearly 5% increase in net profit on year-on-year basis. Now, YOY figures are not comparable for Axis Bank this quarter because the Axis Bank acquired Citigroup India's retail operations in March 2023. On a sequential basis, however, the net profit is likely to rise by 4.5%. Now, what Kotak Institutional Securities Equities is saying that the rise in net profit is likely due to a favorable loan mix towards higher yielding loan segments as seen in the recent quarters, especially after the bank acquired Citibank's consumer business. The net interest margin may decline by 10 basis points on a quarter-on-quarter basis due to higher cost of deposits. The net interest income is expected to remain stable sequentially and rise by 8.7% year-on-year. Overall asset quality is likely to remain broadly stable, but there can be minor slippages on retail loan front. So provisions may be on the higher side on account of expenses related to the acquisition deal worth 12,325 crore rupees. This amount, however, will be spread across a few quarters. So the key focus for Kotak Institutional Equities this quarter will be the integration with Citibank and the progress on net interest margin. Now, what BNP Paribas is saying is that the net profit will be boosted because of the provisions and capital buffering and the robust deposit franchise that the bank has got after Citibank's acquisition is going to help bank to prop up its retail portfolio. The bank has also shown willingness to grow its rural and small banking business, which is likely to boost the loan growth. But on the bank's net interest margin, that is going to see the fastest impact compared to to its peers, because in case there is a rate cut by the RBI going ahead. Similarly, on the rate of return on earnings is going to be above 18%, partly due to the low credit costs. One interesting bit is that that Axis Bank's short-term borrowings is at 16% of NDTL as of FY23, which is significantly higher than its other private lenders. So the margins are vulnerable in case the RBI does not cut interest rates on account of changes in inflation or India's external account dynamics.